Bess, the first question is what you made of this data. Do you think we should be looking at the miss this month or taking things in sort of year to date as a whole?
Yeah, I think it's better to take things in year to date as a whole. I mean, month to month, things are going to change. And I think the Fed message will hopefully help to mitigate some of the volatility that we've seen in the housing market. And look, there's a lot of pent up demand. We see that mortgage rates are now starting to come down. And I think hopefully over the summer, the Fed will cut the Fed fund rate, which will maybe help to inspire rates to come down even further. But the housing market has done incredibly well considering all of the headwinds with tight inventory, rates going up, and, you know, the issue of the economy, which has been the biggest discussion of all.
Talk to me about mortgage rates just a little bit more. You said they've started to come down. They came down 4 to 6 weeks ago, ticking back up again of late?
Yeah, but now they're the 30-year is hovering around 6.3%, 6.4%. And I think economists are saying that that's probably the likely place that it will be. Maybe it'll get down to in the high fives if we get lucky. But I think this is where the consumer has now acknowledged the fact that this is where mortgage rates are going to be. They're still historically very low. And this is inspiring sellers to start to put their homes on the market. We desperately need more inventory. That's been the challenge. That's these rates have held people back from listing their homes, and it has also held people back from buying homes because they wanted to see what would happen with mortgage rates.
Where is the market hottest, both regionally and within price brackets?
I mean, look, it really depends. I think you hear the melodies of New York City in the background. I think one of the hottest markets in the United States right now, it's Palm Beach. Miami is also a really busy market, but Palm Beach remains a market where people want to be. Companies have moved, people are investing, and there's just not enough inventory. So that seems to be a great place where people want to go. The challenge is obviously inventory. And New York City, we're a great place because we do have ample inventory. And so we're seeing the market pick up here, which has been a good thing. But it really depends on people's circumstances. Remember, the market is here to serve you, right? And so people have to decide where they want to be, where is the best place for them to call home, and make the decision according to that.
And talk to me about how important the sort of confidence factor is. Stock market's doing well. Obviously, there's at least talk of rate cuts. Is that enough to trigger people to start listing those homes, start looking to upgrade, even if the mortgage rate hasn't come down yet?
Yeah, I think it's enough to get some momentum going. I do not think things will be dramatic. You're not going to see this huge shift of everyone putting their homes on the market. As you know, change is incremental. It takes time. But people, by virtue of life cycle, have to sell sometimes because they get a new job, because they're moving to a new neighborhood. Their family is growing. So I think that's going to happen. And I think the fact that people are acknowledging that the economy is in a stable place, Wall Street is very happy right now. And I think that people are feeling a little bit more optimistic than they were. But there are some headwinds. It is an election year, and that always creates some uncertainty. So I think we have to be patient. Patience is important in this environment. And the home buyer right now knows that it's a great investment. It's something for their future. It's something that's for consumption and something that people believe in time over time. I always say you can't live in your stock portfolio, but when you buy a home, it's something for the long term.